Welcome to Inside Startup Investing, the only podcast where you can invest in every guest. Well, in this case, Rebecca's company DealMaker actually empowers you to invest in hundreds of companies every year. You see, Rebecca Kacaba is one of the maverick pioneers of the digital private market ecosystem as one of the founders and CEO of DealMaker. She and I met several years back at an early on conference for our space when she was just getting DealMaker off the ground. Now, DealMaker is one of the leading players, powering some of the largest raises in our industry, from Picasso's $70+ million offering last year to the Green Bay Packers fan-owned raise that brought in tens of millions of dollars with ease. She and her team have created one of the most seamless investor acquisition toolkits for founders, and in doing so are winning over founders and retail investors alike. In this episode, Rebecca and I get into all things retail investing in 2026, from the importance of retail ownership powering future brands, to navigating some of the challenges in the current regulatory waters, to why some of the most successful raises today are those who continue to raise from retail, bucking the institutions in favor of building a bigger community of investors, and much more. If you care about the future of our industry, if you care about creating better access for retail to private market investments, and you love this industry as much as I do, this is a must-listen episode. Rebecca is one of our best advocates, both on Capitol Hill and with retail investors alike. Her knowledge and insights are another piece of the puzzle to scaling our market to the masses. So with that, let's get on to the show, and welcome, Rebecca. I know I've had the great privilege of getting to know you over the past many, many years. Tell us a little bit about yourself and what is DealMaker?
I am Rebecca Kacaba, CEO and co-founder of DealMaker, which is a technology platform that helps companies raise capital from retail investors and their communities. Our vision of the world is that everybody owns the brands they move through life consuming. So you walk into the grocery store, you find your favorite bag of chips, and you become an owner in that chip company. And we want to make it so that everybody in America has the opportunity to own all of the brands that they love to consume.
Well, you all are certainly making a lot of progress on that front. And it kind of goes to this broader trend, right, that we've been talking about, which is kind of the rise of the retail investor, right? And there's some really interesting things going on right now. So talk to me a little bit about this trend of the rise of the retail investor. Talk to me about, probably the biggest headline out there is SpaceX allocating a large portion of their IPO to retail investors. Why now? Why this moment?
Yeah, Chris, I think it's something we've seen building. Those of us in the industry have felt building for a long time. It's one of the reasons that DealMaker has had such great tailwinds behind us. We saw, Reddit on their IPO allocate 8% to their user base. Bullish went to 20%. Gemini started at 10% and jumped to a 30% retail allocation. And now Elon Musk, the forward-thinking visionary, coming right out at SpaceX with a 30% retail allocation on their IPO. And they're all dialing into something that we in the industry have seen for a long time, which is the power of diversified capital and the power of retail as a capital engine. And we at DealMaker believe brands are built online today. And so savvy founders know that their community is important. And if their community can be on the cap table with them, they can have 80% more engagement with that community, and then the brand will do better. And so we're seeing all these large, companies going public now who are wanting to make retail a part of their round. And thank you to Elon, for being a big spearhead of this trend, because I think it's going to do such great things for awareness for us in the industry. And he's really pioneering this cap table solution that a lot of other people are going to follow, right? He's a big trendsetter.
100%. Well, you know what? I actually think it's really interesting too. I don't know if you work or have an account with Robinhood or SoFi, but they also offer that access, right, to be able to get in on specific deals where they get an allocation. And I myself, being someone in the industry who loves this stuff, always am trying all the new things, right? And something I found with Robinhood is pretty much every allocation I put in for, and I don't put in large allocations, but I'll put in for 100 shares, 200 shares, I'll get 5% of that at best. I almost never get nearly the allocation I want, which tells me there is far more demand for retail allocation than's being given right now. So what do you think are some of the things? I know Elon is obviously a trendsetter, but what else can be done to bring more retail access, whether it's in IPOs or in the pre-IPO market as well?
I think what you guys do and what we do is really important, getting retail access pre-IPO, because that's where the value can be built, right? Like you even saw SpaceX on their Series A, right? If you put in $1,000 then, you would have $10 to $15 million today. So you're talking about massive gains on massive winners. And we all know that that's the scale that you're playing at when you invest in early stage. That's the VC game. Not every company is going to be a winner, but the ones that are really going to make up those returns in a really big way. So the earlier folks can get access, the more they can have access to those outsized returns. And so I think, Chris, a lot of what the AI companies are doing today is also really helping us. We saw OpenAI do a private round in March where retail was allocated $1 billion. And exactly to your point, retail ended up closing $3 billion. And so people are realizing there is good retail demand here. And if we can leverage that retail demand and have people participate in the value creation that we're seeing, there's a big opportunity for a brand to be more beloved by people. And AI companies really need that today. There's a lot of talk about job loss. There's a lot of negative press. So it's a great way for the AI companies to give back to the users and say, hey, why don't you participate in the upside with us?
Now at DealMaker, you've had a lot of success over the past couple of years, really growing into having more established companies that are raising larger sums of capital under things like Regulation A. What has been the strategy to source and onboard these types of companies? And what's kind of the winning pitch or the thing that is getting some of these companies to tip and say, you know what, maybe this does make sense?
I think that's a good question. It's really about people understanding this as a strategic source of capital and how to leverage it and building those proof points, right? You see a company like Picasso raising $73 million with us this year, and all of those investors who came in are also users on the platform. And so that is really helping drive the business forward. I did that myself at DealMaker as well. So I truly believe that that is a strategy of how you can use your investor base to help build the company and drive revenues. And so the more the industry shows that strategic benefit of the capital, the more we are going to have people say, hey, I understand the strategic benefits of this. A VC can do certain things for me. They might put a board member on. They might help me build the company. They're also going to get pref shares that stack ahead of me. So there's, benefits to each model. The retail investors are going to help me build the business if I can leverage them correctly.
One of the other things that I have thought is really interesting about your model, right? You kind of, when we talk about equity crowdfunding, as people knew it kind of in the 1.0 era, it was all about, oh, you're tapping into a crowd that exists already, right? On some of these platforms, they have crowds of investors. And DealMaker is actually gone completely against that grain and said, no, bring your own community, build your own community and own it. Why is that the strategy you decided to undertake, and why do you think that's winning?
I think when I started back in my legal career in the early days, part of my thesis around the model was understanding that people had communities of investors that they wanted to tap into, and they felt very strongly that those were their people. And so when I did my user interviews, that came through very clearly to me. And so I wanted to build to support that ethos. And that's really how the DealMaker model evolved. And as we can see, it's become a great proof point today. Everybody's community is slightly different. The reasons people might invest in different kinds of businesses are different. They may be users or consumers of that product. And so by developing a custom community, we can really create the bond between the brand and their investor in a way that benefits the brand. It is a very unique model, but it's one that's proven successful.
One of the other things that I think is really unique, and I don't think people necessarily on the outside fully realize, this is raising money from retail is a massive marketing and sales effort, right? I mean, that's what it boils down to. And from what I've heard from many companies that have worked with all of you, is that you provide some of the most powerful tools for marketing analytics, retargeting, tracking, owning all of your data, so on and so forth. What are some of those decisions you've made on that front and some of the learnings you've had over the years that are really helping to put a lot of power in the hands of the founder and the agencies they work with to empower them to have really successful raises?
I think that's right. I mean, it's a unique formula. You have to make sure that all the channels are working together. It's a craft that we've built and honed over many, many years. It really is a way that you can craft a message, take a message to market, and then consistently push that message with the various tweaks that it needs through multiple channels. That, for us, is the name of the game. And when you do that, you can then be very accurate with the data that you're collecting to build the size of the community bigger.
When we think about repeat issuers in our market, I feel like it's at one point there was a bit of a pushback on repeat issuers being like, oh, these are people who are just constantly desperate for money. But then if you look at the venture ecosystem, people raise every 12 to 18 months until they IPO or exit, right? So it's actually a fairly common practice. And I feel like we're starting to see some issuers who are really A, driving growth in their business, but also B, driving growth in their capital raises. What are your thoughts on the repeat issuer, the model around it, and how that's driving success long term?
I think you're right, Chris. I think people are always quick to paint the retail category with a dark brush on every little thing that they see. But if you look at this as a source of capital, it does have a lot of parallels to VC type investing as well. And that is exactly the case. Repeat raising is very common in the types of companies that people get an opportunity to invest in. And so that is a normal characteristic. And if you look at the power of a community, it becomes more valuable over time as people become even more bought into the story and see the management team producing results. And so all of that is a great signal, in my opinion, not a negative one.
In terms of exits, one of the key linchpins I feel like for our market is seeing more exits so people understand that progress is being made, people are making their money back, getting good returns. When you think about kind of blending the portfolio of issuers you work with for some later stage stuff that could be IPOing soon, talk about maybe the Newsmax deal that you all worked on a year ago. What are your thoughts there? How do we get people comfortable with that? This is a really long-term hold type of investment, but also finding opportunities to get them more near-term exits as well.
I think that's right. I think people sometimes forget that privates are intended to be a long-term hold. If you look at, the average return cycle, even on a VC portfolio, you're looking at a 10-year horizon. And so people need to understand that when they make their investments into privates, and then they need to balance their portfolio. And that's really the fun of this category, is people getting to build their own portfolio of brands that they love. And so we try to make sure that there's a mix of that available to people in the ecosystem. And I think a lot of the platforms are doing great jobs moving people towards liquidity. And you're bang on. As we have even more mature companies using the ecosystem, retail will get access to a balance and a different number of companies that are on different year cycles in their liquidity horizon. And that's all good for the growth of the space.
In terms of the variety that's on your platform, again, one of the other misnomers is that retail will only invest in consumer. Certainly not what we see in the data, but in terms of the companies you're working with, what types of companies have you seen be successful in raising capital in this space?
We've seen a lot of technology, robotics, clean tech. I think what it fundamentally comes down to is people wanting to invest in the tools or the brands that they want to see exist in the world or that they're already consuming. And so that's one of the reasons we see clean tech doing really well, is because those are the kinds of companies that people want to see exist. And that's what I love about the power of retail. It's different that way than institutional, where people might just throw a little bit of money in at an idea because they'd love to see that brand exist in the world. And so we see different kinds of companies catching on and being created and getting funded, like robotics, which has been traditionally a very hard sector to get funded. Retail has powered some amazing tools like that over the past decade.
Now, in a consumer-centric pillar, there's sports, and I know that's an area you all have leaned into, is kind of the sports sector. And I mean, around every corner, there seems like there's a bigger and bigger deal being done across teams being bought or selling minority or majority stakes for tens of billions of dollars. I mean, it's pretty wild what's going on in sports right now. And it seems to be having its moment as an asset class. Again, seeing that you all are leaning into it, why lean into it now? And what are some of the opportunities you're seeing on your horizon to work with?
Yeah, for us, it was a lot about the movement of ownership that started to happen in sports as a category, and knowing that there are actually over 100 fan-owned sports teams in the world, a lot of them existing in Europe, where it's quite commonplace in soccer, as we call it over here, to have fans sit on the cap table. And so we thought, wouldn't it be cool if we could bring that over to North America and show people that the European model, where fans do get a seat on the cap table. And the ROI for the team is so clear, right? Fans are so passionate about their teams. Why wouldn't you have a way to get them even more engaged that's more positive and healthy for the team, rather than sports gambling, which has really taken off and drove a lot of interest in sports, frankly, over the last couple of years. So that's been really fun. I think that category really understands the benefits of fans sitting on the cap table, and there are so many different leagues developing. We've done raises for soccer teams, fighting teams, all kinds of new leagues that are popping up, and really wanting to connect with their fan base in a new and different way.
I know you've gone to the Hill before and you know, kind of petitioned for our industry to see changes that could be beneficial to online capital formation. One of the pushbacks I've heard from some sports teams along the way is some of the regulations around whether it's Reg A or Reg CF, with the amount of disclosure they have to make. What are some changes and things that you all at DealMaker are thinking about that you think could be beneficial to push the industry forward and get more buy-in from people who are wary of some of the rules that exist today?
The main ones that we are focused on are increasing the caps. I think it's important for larger companies to enter the space to get retail more access to bigger companies, where a raise doesn't necessarily max out at $75 million. We did 3 of those in the last year, and you can see it presents a challenge to a larger company that just wants more capital. I do think disclosure is important for investors. There are other rules that make operating in the space for everybody a little bit challenging around broker-dealer rules, so we are focused on streamlining some of that. And it's all consistent with what Congress wants, with having a natural glide path for companies who raise retail capital to eventually be able to go public. So small tweaks like that, but I would say largely the rules are well framed. They've proven out investor protection over the last number of years, and we can continue to hone in on them. It'll be interesting to see what happens with the new SEC rules coming out that Atkins is talking about, where they are talking about making new exemptions for crypto type products that sound like they're very much going to mirror Reg A and Reg CF. And so we're anxiously waiting to see the drafts of that new legislation, as I'm sure you are, so that we can see how that's going to impact our industry.
Recently, DealMaker raised a fairly sizable round from a venture investor who I believe is reinvesting in all of you. When you think about deploying that capital, where does it go? How does it help to grow DealMaker in the industry?
Yeah, a lot of it is around creating awareness for the category. I think that's our primary goal as the market leader, is to make sure that people understand retail capital exists, the benefits of it, and that it's a great addition to people's cap stack. It's not intended to replace other sources of capital, but it's a great complement that people can use to help them build their business.
When you look out 3 to 5 years from now in our industry, what do you want it to look like? What would be success from your perspective?
From my perspective, it would be everybody knowing that they can own the brands that they love. So walking into that grocery store and picking up their favorite brands and being able to own them, knowing that the battery in their cell phone is a company that they invested in and they're benefiting from using that cell phone, that they own the company that made that very cell phone itself. And so all of the new brands that are being built across the country, we want to make sure that retail has access to.
Being a founder is an exceedingly challenging ordeal. Seemingly building in this industry is 10 times even harder than that from my perspective. Certainly, I'm very biased being in it, but this is not an easy one. No one wants to change. The incumbents don't want to change. Retail is slow to change just because they need to become aware and be educated. There's so many challenges from when you all got into this. I know, we're meeting up at conferences very early on in this industry when we were just getting started over 8 years ago. What has been surprising from a challenge perspective about building DealMaker that you didn't expect, and what keeps you going every day?
I think what's been the most pleasing to me is seeing how much the reception to what we do is changing, and I feel it every time I meet with institutions. It was probably about a year ago that I realized that people were understanding our value a little bit more. I think that changes with time. I do think, we're seeing 33% of 25-year-olds having an investment account, which is 6 times more than it was in 2015. So there's been a seismic shift in the amount of people who are involved in investing. And I think that is really changing the perception of our industry as well. So I love to see that. What has been the most surprising would probably be, you think as you get bigger, it gets easier, and it doesn't.
No, it does not get easier. The problems change, right? But problems still exist.
Yeah, it's just a different kind of problem. So
it's a different new problem. In terms of DealMaker, you made an intentional choice to be kind of behind the scenes, right? Like, people know the start engines because they go to that marketplace, but it's really the brands that own the brand, right? If you're raising for your company, it appears as though it's your company. In making that choice, what do you think, what are the benefits? Are you really just a founder-focused company? Or how do you think about the retail investor in what matters at your business?
Yeah, you're right. That is a very intentional choice we've made that is different than most of the market. It's the core essence of our model and why our model works. And so it's not so much at the forefront of my mind in comparing ourselves to others. We don't really think about it that way. We're running our own race, and we know what our model is, and we're committed to building the platform that works the best for our customers, and that happened to be the model that works the best for our customers.
I like to do this on all our podcasts. I like to give the last word to the founder we're talking to. So for those who are listening, usually I say, hey, if you're on the line about investing, what do you want them to know? But just from your own lens and own perspective, what would you like folks who are listening into this to know?
I think the rise of retail is upon us. Elon is setting the trend. He's a trendsetter in many ways, and he's defining what the cap table should look like. And I think people should take note of that and follow suit.
If you like what you heard on the show today, you can check out all of DealMaker deals by heading over to Kingscrowd and filtering for DealMaker deals on our Deal Explorer page. And as always, if you like what you heard on the show today, please like, subscribe, and share our podcast wherever you listen so more investors like you can find us. Thanks for tuning in, and happy investing.